our IT services business got back to a strong 4.8% quarter-on-quarter growth, while the product engineering business had a decline of 2.5% quarter-on-quarter growth. The growth in IT services was secular across all the vertical segments we address. The decline in the product engineering business is seasonal because a number of technology companies have shut down during the last part of the year, and we have faced a similar scenario even in previous years, and so it's not something which is of concern. What we'd also like to highlight is that when we had shared our business outlook in the beginning of the year, we had shared our perception that half year 2 will be better than half year 1. And we are glad to confirm that this trend is certainly been seen in the way in which our results look. We also see that in quarter 4, we would continue to maintain the same growth levels as what we had in quarter 3. Now let me give you a few highlights of the results of quarter 3. What is most heartening is that beyond the quarter-on-quarter growth, our quality of customers has increased. Our number of $5 million customers have increased by 4 to 21, and the number of $10 million customers has increased by 1. This really reflects the focus we have had on account mining. We've also had a few good wins during the quarter, one of which is with an existing large customer of ours in Asia Pacific, which is a leading company in the area of pension and gratuity management. We also had a good win from a client which provides a cloud-based solution for collaborative document management and information sharing. MindTree will provide product engineering as well as testing services for this product client. Our IP-based business, particularly our leadership in the Bluetooth low energy segment, continues to be strong. During the quarter, we won a very strategic deal with an IC design company which has licensed MindTree's Bluetooth low energy solution. So overall, we have about 245 customers at the end of this quarter, and we've added 8 new customers. Now let me share our outlook for FY14. Now, we've been engaging in conversations with our top 30 customers, and clearly we are seeing that they are far more positive about the outlook and their investment plans for the next financial year, except one client who's in the top 10 who could either be stable or have a marginal negative on their budgets. If we also look at new opportunities and the funnel which we have, it is much better than what we had during December 11, and consequently we believe that FY14 will be a much better year on growth for MindTree. So with that, let me pass it on to Rosto to share a few financial highlights.
Coming to our financial results, like AK mentioned, Q3 was a very satisfactory quarter. In the quarter, our fee revenue grew 2.6%. That broadly breaks down into a volume decline of 0.7% and a price increase of 3.3%. The volume decline was mainly on account of the seasonality factors that affect us in every December quarter, in the form of greater holidays, lower billing days, and some of our customers experiencing a shutdown in this quarter. Other than that, we did not have any impact of any project cancellations or anything like that. It's mainly the seasonal factor that led to the volume decline in the quarter. The price increase was partly contributed by the fact that on our fixed price projects in the quarter, since volumes were lower, the price realization therefore correspondingly showed an increase. In a few cases, it is also the benefit that we got from our non-linear initiatives. Some of our IP licensing projects also led to the fee increase in this quarter. EBITDA at Q3 was 20.4%, a decline of 1.7% or 170 basis points compared to the previous quarter, predominantly because of the rupee appreciation in this quarter. The average rupee rate in this quarter was about 3.4% higher appreciation compared to Q2, and that's what led to the profit decrease at an EBITDA level. However, at a net profit level, profits grew significantly, almost by 50% on a year-over-year basis and about 40% compared to the previous quarter. Very heartening to also note that our EPS for the 9 months ended December was approximately 63 rupees, which is higher than the full year EPS of 54 rupees in the last year. So in 9 months, we have already beaten the full year earnings per share compared to the full year of last year. Cash generation in this quarter was very healthy, and also our ROCE levels in this quarter were very healthy. Utilization is 71.4% in this quarter, broadly remains stable compared to the previous quarter.